Hey, what's going on, guys? So I decided to make a video about things to watch out for and important topics to learn before you go and buy a house or any property, whether it's to live in or as an investment. And I just wanted to kind of bring these up because I've seen them help a couple of my clients as well as myself when purchasing property, and I thought it might help you guys as well. One of the most important things, if not the most important, is location. And most people already know this. But when it comes to location, most try to find an area or a neighborhood that has a lot of potential for growth, whether it's to live in as a primary residence or as an investment property that you're not going to be living in. People try to find any area or neighborhood or street that has a potential to grow. And you've heard this if you talk to any agent or any other investor, they've probably told you that try to buy in this area and live there because in 10 years the property is going to be worth X amount of money. And this is true, but my way of thinking is a little bit more complex and also considers the individual's personal needs. So if you're going to be driving to work, how far is your work? If you're going to be driving to school or busing to school, how far is your school? If you have kids that need to go, to extracurriculars or go to school, you need to consider all of these things because they will add up. Now, that being said, location for opportunity to grow as a property would is important, but if you consider any city center like Toronto, all areas are going to grow, and it's very unlikely that you buy in a specific part of the town or city and everything else around you goes up in value except your street or your neighborhood. There is the odd exception, but usually that does not happen. So my personal opinion, I would advise to consider, exactly, where do you go to school? What do you do for work? Where do you work? And how is the location of the house that you're interested in going to affect your daily commute or anything else? On top of that, I think when you go to see a property, you should go and see it at different times in the day. Don't just see it, in the afternoon, Sunday afternoon, or Thursday at 5, 6 p.m. after you're done work. Try to go, throughout different times, different days, just to see how the neighborhood is, how the level of traffic or the neighborhood noise, things like that are at different times during the day and different times during the week. Because most of the time you're going to be going to view properties, have showings at a set time every single day just because your schedule is like that. Try to actually take some time out of your schedule and go and see the house that you're interested in at different times during the day. This will help you a lot. The second thing I would suggest to watch out for is little and big things that you can renovate in the house. And this can be anywhere from painting a wall to completely redoing the inside of the house. And I think that most people consider some small renovations and small cosmetic issues to be a little bit bigger than they actually are, which kind of unfortunately leaves them in a position to pass up on great opportunities and great properties. Now, when I say cosmetic changes, I'm talking more so about if you go and you see a wall on the outside of the house, it's painted red or pink or something weird, or you go inside and you see there's ugly faucets in the kitchen or in the bathroom, or maybe the backsplash has big tiles or small tiles. Whatever the case is, things like this don't actually cost too much money to fix, and they're not that hard to fix either. Something like painting is probably going to be couple $100 at most, and a few days of your time. You can probably get it done on a weekend. I would not suggest putting too much weight on these cosmetic issues and more so focus on bigger problems when you're looking at properties. Now, if you go into a house and you see that the kitchen is here and you actually want it on the other side of the house, and the bedroom that's all the way over there, you actually want that bedroom over here. Things like that, you're technically changing the entire floor plan, and I would not suggest purchasing or looking into purchasing a property in order to make that change, because you're going to end up spending a lot of money. Now, if you do purchase that property and you buy it for significantly under market value, then it's a good idea, or I would advise that you can do that. But if you're going and you find a $700,000 or $800,000 house and the market value for that area is about $700,000 or $800,000, I would not suggest you spend $100,000 just to change the layout or the floor plan of the house, because for starters, it's going to cost a lot of money. Second, you're probably going to have to hire a professional contractor or a manager to oversee the construction that's happening. And three, you're going to have to get a ton of permits from the city in order to even start that. So when you guys are going out, checking out properties, try to look at the different scopes of work when you try to assess little renovations or big renovations, and try not to put too much weight on minor cosmetic issues, because I've personally seen it. You go into a house, you say you don't like it just because of small little things that could be fixed within a week or two, and you pass up on a great opportunity, a great house, a great location. And I think that can be a little bit of an offset. Number 3 is home inspections. Now, I personally would advise that everyone get a home inspection, but I understand that it's not always possible either. Now, if you are in a competitive housing market where it is a seller's market and every single house has multiple offers on it every time it's listed, there's 3 or 4 buyers or 5 buyers for every one house that's listed. In a market like that, it's a little bit harder to negotiate and to put a conditional offer down, because most likely the other buyers are not going to be doing that in order to get the property. Now, this being said, I would still suggest you try to work something out and negotiate something with the seller, because it's a couple $100. It's a little small inconvenience to have an inspector come in and check things out, but in the long run, it could save you thousands and thousands of dollars. And a personal example that I have gone through, we went in to check the house. The buyer saw a water stain on the ceiling, and curious, went asked the seller's agent, and they responded by saying there used to be a leak here. There was a leaky pipe, and they actually fixed the pipe, and now it no longer leaks. Obviously, when we were there wasn't water dripping and pouring down. It was a dried stain, but still, I definitely would not trust that. I would get a home inspector to come, assess that situation, see if there's any other problems that are not on the surface. This is only something that we're seeing, and also do a full analysis of the entire house to make sure there's no other problems. I personally would strongly suggest, even in a competitive market where there are multiple buyers for every seller, to try and work in a home inspection, just to avoid having that future headache and all those future bills, just to try to fix things that you did not even know about. And lastly, I would suggest not incurring any new debt, taking on any new forms of debt right before you go into the bank to get a mortgage. And this debt can be in the form of a new credit card, a new line of credit, a new car, whether you're leasing or financing. Things like that negatively affect your file, and when the bank is looking, they see you as a high-risk borrower, and for a high-risk borrower, they generally tend to give you less borrowing power, and in addition to that, probably higher interest rates that you're going to be paying. So it's not really a good thing. On top of that, try not to change jobs right before. Try not to make large cash deposits into the bank. Things that could look sketchy or get flagged are generally not good. At the end of the day, the bank just wants to see that their borrower is capable of making their payments on time, making the interest payments on time, so that they can make money off of you. Alright, that's it guys. Thanks for watching. If you like this video, please thumbs up if it was informative. Share it, subscribe, and that's it. Until next time, see you guys. Peace.